Good morning. I should say great morning. Why do we say good morning when it's clearly such a great one? Welcome to the Street's opening bell here from Post 35 on the floor of the New York Stock Exchange. Can you tell I'm caffeinated? Today is Tuesday, the 29th of November. I know. I also don't quite know how it's already the end of November. The holiday season is here, folks. I'm your host, JD Durkin. Opening bell rung moments ago by SP Funds Management. Major indexes were flat in pre-market this morning after stocks staged a major pullback at Monday's session. Investors taking a fair share of profits in the session yesterday. Stocks fell notably lower. The S&P and NASDAQ both down 1.5% by the end of trading yesterday. Wall Street feeling a bit more optimistic this morning on hopes that China could tweak its zero COVID policies, though good luck trying to guess or predict exactly how that situation is going to play itself out. Taking a look at what is on tap for this morning's broadcast, we will dig into recent comments from Fed officials as investors continue to try and search for clues into the central bank's next move. You hang on every word these people say because they have the meeting, then they have the minutes, then they make all these other speeches and people are trying to parse through word for word. We'll bring you everything you need to know. Plus, it's the clash of the tech titans, and Elon Musk and Tim Cook go head-to-head, apparently. And finally, we'll bring you the latest as the threat of a national rail strike looms. What you need to know in the White House's role. That'll round out the show. For more on those stories and so much more, we now bring in Mr. Martin Baccardax. He is our senior editor and markets correspondent and the only man I like to talk to in these situations to help me separate fact from fiction and to restore sanity to us all. Good morning, Martin. Stocks pulled back in yesterday's session. What were some of the big factors weighing on the markets yesterday that helped set the stage for today?
For the most part, I think investors were looking at the situation and trying to game out what they anticipate from the leadership with respect to the COVID zero policies there. Of course, we had those unprecedented protests over the weekend. That, and I think some, I suppose you could call it hawkish commentary from the Fed, but very likely just a reasonable extension of what the Fed has been telling us for the past couple of months on the inflation and the rate front. You put those two together and you had a reason to take a bit of profit in U.S. stocks yesterday. It's mixed again as we start this morning. I don't imagine both of those dynamics are really what's driving trading in the absence of some major sort of headline drivers with regards to the jobs data, which comes later this week, and given the fact that we are essentially at the end of the third quarter earnings season as well.
Let's talk about the latest in China overnight. How is this weighing on markets back home? And are there any tweaks to China's zero COVID policy that investors might be able to hang their hats on here stateside?
Not at present. There was some speculation last night, which drove a big gain for Asia stocks, in fact, that China was going to have some kind of, well, if not announcement, at least an indication that they were prepared to loosen some of the restrictions. But that didn't really materialize, apart from some messaging from Beijing that they were going to sort of accelerate the drive to vaccinate elderly citizens. That could actually go a long way towards providing at least some degree of herd immunity in a country of about 1.2 billion people. But it is a long and tedious process to get there. I think the mere fact that the government is recognizing it needs to step up not only the messaging, but the actual vaccination program is probably reason enough to be optimistic. But there wasn't any further indication that they're willing to sort of change anything with regards to quarantine time, travel restrictions, or indeed the need of some manufacturing facilities to operate in these closed loop systems where if there is an outbreak, suddenly workers are not allowed to enter or leave for a period of time until they can provide a negative test. That, of course, is hugely disruptive, not only in human terms, but in output terms as well. We've seen it play out with Apple and indeed some other companies, Tesla, over the summertime as well. So some slight change in messaging, but no significant change in prospect. And I think this morning's move in Asia markets were more based on hope than anything else. And that was blunted very quickly as we got closer to the open here on Wall Street.
Yeah, of course. And Martin, as we know, you're talking about a country that has gone to incredible lengths to clamp down on the spread of information, just information itself, not misinformation, the likes of which we deal with here in the West, just information and social media posts. And I wonder if there's any kind of prevailing thought you have with something we talked about yesterday, the really incredible nature of these protests. You think about even the bravery of these citizens in terms of citizen app tracking and surveillance cameras and these other reports we hear out of that government. It's pretty incredible to see people in these numbers in many of these main metro centers in China rise up. And there is a business component to that story in and of itself, isn't there?
I would say so. I think to some degree, the West can reflexively overstate the impact of small demonstrations in an enormous country. In other words, we are talking about 1.2 billion people, and we saw protests of several hundred, probably not much more, in about 2 or 3 different cities. That really does not inspire any sense of upheaval that would be something that would sort of, have the leadership quaking in its boots. The fact that they allowed it to happen was probably more of a strategic option than anything else, because they saw the need for people to vent frustrations as they head into the 3rd year of this pandemic, which has more deeply impacted China than virtually any other country on the planet. And indeed, that was the source of the virus in the first place. So I do think that those protests were obviously, I wouldn't call them unprecedented, but I would say they were rare. And I certainly think they're important, but I don't necessarily think they portend any great change in the way that the Chinese citizens interact with their government, or probably more importantly, the way that the Chinese government feels it must interact with its citizens.
I do want to ask you about the U.S. dollar. Still has been in retreat. We've been talking about some of the updates over the last week. What is driving the current pullback, and what should people know as they get ready for the trading day today?
Yeah, for the most part, JD, the dollar is really just tracking Fed funds futures. In other words, there hasn't been a great change in expectation for Fed rate hikes. So, the assumption of a 50 basis point increase in December is still holding firm. It's about a 70% chance of that. And as a result, the upswing that we saw in the dollar over the autumn, when the prediction was for a significantly higher Fed funds rate in the springtime, has simply faded as a result of softer than expected inflation data and the messaging that the Fed has been out in the field with for a number of weeks now. So that is probably the biggest driver. I would have thought there would have been more of a defensive turn into the greenback in overnight trading, not only last night, but on Monday as well. But it seems that a lot of those safe haven flows have found their way into the euro and the yen rather than the US dollar. That's probably on a value perspective rather than anything else. But it's welcome news in large part, particularly to US exporters, and also really just to any sort of underlying pressures that we would see in emerging market economies, which of course have to buy commodities priced in US dollars. If there is a pullback in the greenback, that makes those purchases cheaper, and that will probably engender, if not growth, at least a stabilization in commodity costs over the near term.
We talked yesterday about WTI crude reaching its lowest level in nearly a year. It's a little over 11 months. I believe the low mark was actually towards the end of December in 2021, but you're still talking about a substantially long time. What is the latest with regards to oil prices this morning? What should we know?
Had a bit of a bounce back this morning, probably on the very basis of what you just described. The fact that we were at those 11-month lows brought in some value hunters. There's also some speculation that because prices are depressed going into the end of the year, there might be some production cuts contemplated by OPEC, which meets next week in Vienna alongside its major non-member ally, Russia. Now, of course, Russia is facing the prospect of a cap on the crude that it sells to not only G7 members, but to countries around the world. There hasn't been an agreement as to where that cap might fall, but nonetheless, that has been pinching the assumption for output going forward as well. If they can't agree to that, then there is some chance that the OPEC nations will agree to tweak their output and maybe reduce supplies in order to bump oil prices back up to a level that they're more comfortable with at the start of next year. So you put those things together and you have what you see today, and that's a bump up in oil prices. It probably won't have significant effect on U.S. gasoline prices unless it holds above that $80 level for a number of weeks. I don't think there's any anticipation of that if the COVID story in China doesn't change. And therefore, as a result, we're seeing consumer advocates predicting U.S. gasoline prices of less than $3 a gallon by the end of the year. That would certainly be a welcome boost to a lot of consumers as they head into the final sort of weeks of their shopping period.
I would love to continue to pick your brain a little bit with regards to the Fed, and namely here, the comments from various Fed officials yesterday. What did we learn, and who are we paying close attention to?
For the most part, I was struck by the fact that there does seem to be the consensus, at least for the most part, from the speakers that were out in the field yesterday. James Bullard would be probably the outlier, but that is the case with respect to him in most circumstances. But essentially what we heard from, I think it was about 4 or 5 different speakers, was the same. There's probably going to be smaller rate hikes going forward, and that the days of these jumbo 75 basis point increases are behind us. But nonetheless, the chances of us getting to that 5% or 5.25% terminal Fed funds rate, in other words, when the Fed will stop raising rates and then monitor their impact on the economy, is unchanged. We'll probably get there in May of next year and hold there probably until the end of 2023. I don't think there's any anticipation of rate cuts until 2024 at the very earliest. And that, of course, will be predicated on how quickly we're able to decelerate in terms of inflation pressures. We'll get PCE price index data on Thursday, but that will be for the month of October. There's many more readings to come. So for the most part, again, JD, I just think that the Fed was repeating many of the messages that it's been trying to express to the market for a number of weeks now. The market will see them in a frustrating tone to some degree, because every time a rally seems to start to gather momentum, Fed speakers are out in the field trying to tame it. They want to sort of reduce the wealth effect that can, of course, increase inflation if stocks were to rise too quickly for the Fed's liking. That engenders some concern that the Fed is out there trying to snuff out market growth or indeed manage market expectations. I don't necessarily know whether that's true or not. I don't think they speak and think in those specific terms. But nonetheless, the timing has been pretty consistent over the past couple of months. A rally gains momentum and the Fed tries to shut it down. I would imagine that's how we're going to stay, not only into December, but the other part of next year as well.
Of course, you very closely follow and track the CME Group's Fed Watch. What is the latest likelihood with regards to 50 or 75 for the December meeting?
No, as I was mentioning, JD, it's still holding at 70% for a 50 basis point rate hike next month, and that's unchanged for a couple of, well, at least more than a week now, and I would imagine so going into the mid-December meeting as well. There hasn't been a great deal of change on that, and for the most part, the bets on a terminal Fed funds rate of 5 to 5.25% is largely unchanged as well. We'll probably hold into that sort of rate hike scenario for a number of months, again, unless there's something very unforeseen in the inflation data that we're going to get not only this week, but into the end of the year.
Are Fed officials ever trying to signal anything to investors through these comments, these public comments they make, aside from the actual FOMC meetings? I've seen some suggestion to say people very closely pay attention. They hang on little words. I'm sure it's a little bit of a Rorschach test. Every time they speak, investors are looking for the thing they want to see, and they hang on to the words and phrases they want to hear. But what have we seen historically with regards to these non-meeting public appearances from some of these Fed officials, and how closely investors follow along?
Well, sometimes I think that investors follow it too closely, but it's part of the mosaic, I think, of information that markets are trying to digest on any given day. And it's worth remembering that, Fed decisions are the composite of voting members of the Open Markets Committee. In other words, it's not simply Jerome Powell going into a room and telling people what's going to happen. He's gathering information from his team and members of the Open Markets Committee who vote on rate increases or rate cuts or whatever rate decision is being taken. They also rely on the information from their teams as well. So there's a broad collection, not only of economic thought, but potentially strategy, and certainly interpretation. And that all gets reflected in the commentary that Fed officials make in public, because part of their remit is to attempt to explain to the average American exactly what it is they're doing and why. The commentary is not always designed to have an impact on financial markets. It's very often designed to express the sort of, or to engender a better understanding of how the Fed sits in the whole process of managing the biggest economy in the world. So to some degree, I understand why markets are over-focused on certain words and phrases. because they want to get to jump on their rivals and understanding how markets may move as a result of Fed decision taking. But again, for the most part, I don't think this is why Fed officials are out in the field. And I don't think that they're trying to play a cat and mouse game with markets in that respect. They're simply trying to articulate how it is they see data from their teams coming in to their perspective and how that perspective might square with those of their colleagues and indeed the Fed chairman when they meet periodically to make these decisions. So to answer your question, I would say that, again, markets are probably over-focused on certain phrasing simply to get the minute differences in performance on the back of those speeches. But for the rest of us, we can look at it with a broader perspective and a less focused prism to give us a better understanding of what the Fed is thinking.
So to that point, Mr. Powell himself is slated to speak tomorrow. What are we likely to hear? And then in furtherance of the previous point, what do investors want to hear?
That's a great question. I think that those who are hoping for a kickstart to a Santa Claus rally for U.S. stocks are hoping to get some kind of dovish tint from whatever he might say about the labor market or indeed the broader inflationary picture for the U.S. economy. I don't know that they're going to be satisfied by that as a result. He understands how close it is to the December meeting. He also understands that this isn't really the best time for him to sort of, throw a curveball into the discussions as to whether they might go faster or slower, or indeed pivot in any way, shape, or form at all. But he will have to address what we are seeing in the labor market, and that has been puzzling economists for a number of months now. There's an enormous amount of unfilled positions. Wages are starting to slow, and those two pieces of data are incongruent. If there are that many unfilled positions, typically companies have to pay more to get people to fill them, and they aren't necessarily having to do that into the end of the year. And then, of course, we have stronger than expected retail spending as a result of the numbers that we're seeing out of Black Friday and Cyber Monday and all the rest of it. So the consumer remains reasonably resilient. The job market remains reasonably tight, but wages aren't spinning out of control. That might actually be good news from the Fed perspective. But ultimately, that's going to only form one part of Chairman Powell's view and indeed the view of his Fed colleagues as well. So I think the bulk of the commentary tomorrow will be on the jobs market, but that, again, only forms one part of the picture.
It's great context to help set our viewers up for success for what they may hear tomorrow with a bit of perspective as to why it matters, and maybe don't always look too closely into some of these things. I do want to ask you about holiday sales. How are better than expected numbers so far impacting things in the overall economic picture? Look, there's a ton of cross currents happening right now. But we are through Black Friday. We are through Cyber Monday. We are officially at Giving Tuesday. What have we seen so far with regards to holiday sales?
Well, they were up, according to Adobe Analytics, which is probably the benchmark for at least the online sales in any given holiday period. We had Cyber Monday sales rising about 8.5% from last year to 11.6 billion. That's an all-time record, and it's certainly welcome news because it does suggest again that consumers haven't run down their pandemic era savings just yet and are willing to spend it going into the end of the year. But again, that 8.5% gain has to be put in context to consumer price inflation, which is running at close to 8% itself. So essentially, the nominal increase is about flat to last year when you adjust for the inflation pressures. That's not terrible, but it's not great. It's probably better than expected simply because the consumer is hanging in a way that was in question only a few weeks ago and certainly a few months ago. And I would suggest that probably indicates deeper resilience for the US economy as a result. There were people looking for deep discounts, there's no question about that, and they were saving some of their spending power until the very end of the 4-day period in order to see if they could pick off some of those deals. So people are value conscious, that's for certain, but they are willing to spend if they find the products that they like at a price that they're comfortable spending. That probably means that if retailers want to move their inventory over the final months of the year, they're going to have to do it with deeper discounts. That probably squashes margins a bit for some of the bigger retailers as a result. And it may mean a less than robust season, but it's probably just too early to tell. I think the broader stroke of the numbers that we're seeing, JD, is that the consumer is hanging in there and is willing to spend. And in an economy that's driven by services, that's really good news.
Yeah, speaking of hanging in there, we've got another row of holiday lights being hung right up there in the top corner. You can just see it. Look at these guys down here on the... Look at this place. Now it's all festy. There's a lot of holiday accoutrement they put up before Thanksgiving because it's the start of the holiday season. But now they say, okay, turkey's off the plate. We're over our tryptophan hangover. Time for the real holiday season lights. That's it. That's not an important part of the broadcast, just something I figured I'd point out. Okay, let's talk about Elon Musk, because you and I could spend a very long time talking about the latest here. And I wonder, I'm just going to preface the entire following conversation to say, to what degree, I do wonder to what degree this man is sort of taking a page out of Donald Trump's playbook, maybe in more ways than one, in that he just... We're talking about it. We're talking about this. And I wonder to what degree that's the goal, right? Just to stay in the headlines, maintain the topic conversation, dominate the oxygen. That being said, one of his claims is to say that Apple has threatened to remove Twitter as an app from the App Store, which is not something I think anyone has ever really thought about until now. Is there anything to back up that claim or that allegation from Elon Musk, or is this kind of smoke and mirrors?
Not that we're aware of, at least with respect to the claim that Apple was ready to take Twitter off of the App Store platform, although they have done it before with Gab and Parler as a result of their lax content moderation policy. So it's not without precedent, but there isn't any indication that it's coming anytime soon. But I actually was listening to your point about the comparison to Donald Trump, and I think there's some validity there because, of course, one of the sort of great observations of the former president's negotiating tactic was that he would ask for far more than he expected to get in order to set the benchmark at a place that which, even if the other side were to concede, it would still be good for him. He was adept at performing that, and as a result, that characterized a lot of his negotiations, whether that was with political rivals here in the United States or indeed those abroad. Musk might be doing the same thing. He might essentially be throwing down a gauntlet that doesn't exist. And that, of course, is the threat of Apple taking Twitter off of the App Store platform in order to ensure that they don't do it. Because if he engenders enough sort of support from his followers and people who rely on Twitter for their information, he may feel that Apple will be pressured not to take them off the App Store platform as a result. So it could be a tactic in that regard, or it simply could be an indication that he is unable to control some of his impulses in terms of sharing information or sharing his thoughts with Twitter followers, and maybe not understanding exactly the kind of influence he has with 100 million plus followers on the world's most watched social media platform. So it's hard to know exactly what the answer is, but there's no question about it. We are still talking about him, and in a platform that needs relevance, that's probably not a bad thing.
You know, I just noticed this as we were talking, and for whatever it's worth, this is very strange to me. I just pulled up the official Apple Twitter page, right? So on the Twitter platform, there's an an Apple account that's verified, has 8.8 million followers. It follows no one in return. There are 0 tweets posted from the Apple account, which I don't know if they've never tweeted, even though they've had an account since September 2011. And it is a truly verified one, not one of these jabroni pay $8 for a fake verification badge. This is real, it's notable. I don't know if they've deleted all of their tweets or what it is. I just thought that was an interesting development. Is that what they do? So as far as do they regularly delete? Because a lot of companies do that.
Yeah, they do delete. They tend to use that Twitter sort of account for updating customers on big events, going into the Apple event in September or the developers conference or something like that. If they have a big marketing event, they'll use that Twitter account to sort of extend the marketing reach as a result, and then they delete it pretty quickly afterwards.
Okay, fair enough. I was not going to assume that this was some grand, gesture to stand up to the new overlord of Twitter. It's just absolutely fascinating. By the way, there's been no suggestion from. Yeah, go ahead.
No, they are the biggest advertising spender on the Twitter platform as well. They were responsible for about 4% of Twitter revenues as a result of the 48 million that they spent over the first quarter. And there has been a slowdown over the month of November, at least according to some analytics. So the fact that they have that presence on the platform and whether or not they keep the tweets up there is sort of secondary to the fact that their advertising drives a great deal of revenue onto the Twitter platform, which is absolutely crucial for Musk because he has said that he needs to make it profitable in order to ensure that the investor base that he brought in to purchase it is satisfied. So attacking your biggest advertiser with accusations of nefarious activity isn't how most of us would go about engendering a good relationship.
And defenders of Elon Musk will say most of us don't launch spaceships. We don't build the lunar module that's going to land the Artemis mission back on the moon, right? They would say this man has exceeded expectations and done the impossible time and time again. Maybe he's onto something. I just know what the Elon bulls would say out there. To this point, I mean, yeah, Apple spends over $100 million in Twitter advertising annually. I want to get the sense on advertisers tightening their belts because on the one hand, you have a lot of notable advertisers like Audi and many others. And they've said until this rise in hate speech is cleaned up and there's misinformation concerns on Twitter, we're pulling back from Twitter. And critics are out there saying, oh, these companies hate free speech. That's a very popular line that I heard from blue checkmark conservatives yesterday in the Republican sphere of things. These companies hate free speech. But how do you equate that with the same time advertisers tightening their belts and pulling back out of names like Snap and Facebook? Can it be that some advertisers are doing this for Twitter because they do have legitimate concerns, while also at the same time it's true that advertisers are seeing a likely recession come and the first thing to go is digital ad spending?
You're trying to apply nuance to a social media world, and that has generally been a failed tactic for a number of years now. But you're absolutely right. I mean, companies have, of course, pulled back on their ad spend dollars as a result of the concern for the growth of the broader global economy and indeed the potential for a U.S. recession. That's not unheard of. It happens in a cyclical fashion. It will happen again. But the fact that it does tend to overlay with some of the changes that a new owner of a social media platform is trying to put in place, of course, gives rise to the associated conspiracy theories that we're hearing right now. But again, I know we've talked about this in the past, JD, but I think it bears repeating. Free speech as a concept is one that is embedded in the Constitution, but it essentially says that the government shall pass no laws that infringe free speech. It doesn't necessarily empower companies to demand free speech absolutism from the people that they participate with. In other words, here's a great example, the one that I always come up with, is back during the Gulf War, there was a situation in which a young man wore an anti-war t-shirt to a shopping mall. He was asked to leave because the shopping mall itself had a policy of no political demonstrations or messaging during its operating hours. The young man made a claim that his free speech had been infringed. The courts were quick to tell him that he had no such right on private property. Twitter is essentially private property, so therefore it's, with respect to its regard to free speech, or indeed the rules that it puts around free speech, are for it and it alone to make. Now, the corollary is that
Martin, I'm going to stop you for a quick sec. We lost your audio for a sec. We're going to check back Martin. We're going to check Martin back in. There we go. Words are tough on a Tuesday. Hey, Martin, sorry, we lost you there for a sec.
That's okay. Yeah. So in other words, I was saying the corollary to companies setting their own rules for free speech is that advertisers can decide for themselves whether to participate or not. Free speech is indeed a two-way street in this respect. And it is completely absent to the broader understanding that most of us have to free speech rules as they pertain to U.S. law. So it's a different conversation altogether. And the fact that people shout the words free speech doesn't necessarily mean that they're using it in the proper context.
Yeah, thank you for that. Thank you. And thank you for the reminder, by the way, the First Amendment clearly says Congress shall pass no law. Like, that's literally what it is. If you consider the role of what was originally the Bill of Rights was to limit the powers of the newly established federal government from a couple years before. These are laws that apply to government, not individual entities. Thank you for that reminder, because we have, go ahead.
No, and JD, even beyond that, there is no absolute right to free speech. There are laws against libel. There are laws against slander. There are laws against inciting to religious and racial hatred. There are hate crimes legislation. There is a host of legislative tack-ons to the assumption that free speech is some kind of absolute carte blanche. It simply does not exist, and it's kind of extraordinary that we still assume that it does.
No, thank you for that. I do want to pull up a tweet here from Elon Musk, because what's amazing to me is now when you get into a real incredible clash of individuals who are tech titans. And that brings us to the tweet about Tim Cook. Elon Musk on Twitter, of course, said, excuse me, Apple has mostly stopped advertising on Twitter. Do they hate free speech in America? Do they hate free speech in America? He followed up by then tagging Tim Cook directly. What is your sense here? Because it's one thing, I feel like, for a representative of a company to go after other companies. It seems to bring this into a little bit deeper territory to tag Tim Cook directly. Not that Tim Cook's going to respond on Twitter. Do you have a sense on the end game here? Is it to produce his own smartphone, or just to kind of get us to talk about it?
I think probably the latter, to be perfectly honest. I think, again, if Musk wants to establish a forum for discussion, let's put it that way, that has relevance with respect to public conversation, he needs to make sure that that relevance doesn't drift away. And the best way for him to do that, as probably the most followed person on the platform, I think that's true, but I'm not entirely sure. The best way to do that is to say outrageous things and to engender reaction as a result. And I will confess that as participants in the media, we have followed along with that tactic pretty obediently, because we do tend to respond to each and every thought that comes into his head that is expressed on the Twitter platform. Now, we kind of have a responsibility to do that because it does resonate into financial markets, and that is our remit. But for the most part, we also perhaps apply too much assumption of an end game to what, to me, really just seems as a way that he can stir the pot. And I see this as little more than pot stirring, at least at this point.
Absolutely stirring the pot. By the way, for whatever it's worth, Elon Musk currently has 119.4 million Twitter followers. I don't know how many of them are bots. That's a separate conversation for a separate day. I'm sure there's a sizable, I don't actually think 119 million human beings follow this man on Twitter. But that's good for number two. Number one, former President Barack Obama, about 133 million, of course.
There we go.
The idea of Twitter amnesty has been front and center in the Musk tweets to his 119.4 million. He says accounts are being reinstated. Of course, we have the big ones, the Kanyes of the world, the Trumps of the world. Do we know much about the others? And I wonder what that means for advertisers who have probably felt that this was more or less a safe space to gravitate their money towards, but probably not if you've got a whole host of accounts that were previously kicked off under old standards that were okay by advertisers that now are going to be allowed back on the platform. This is messy, isn't it?
No, it truly is. And I think we saw this play out to some degree, JD, in broadcast television when there were production companies that were, HBO being a great example, which were basically setting up their own off-cable platforms in which they could produce and broadcast content that was outside of the stricter FTC jurisdictions. And I say that to say that advertisers were still more comfortable with the old-fashioned rules and would spend more money on broadcast advertising than they would on new broadcast advertising, simply because they wanted to sort of maintain the relationship they had with their customer base. And they didn't want to see their advertising on a platform that would be a little bit too risque or a little bit more forward-thinking with respect to language and nudity and all those other things. So to some degree, you're seeing that play out in Twitter in the sense that if Mr. Musk would like to expand the platform's reach by having more voices on it that people seem to associate with unsavory commentary, it's going to, as a result, inhibit his ability to grow advertising revenue, because advertisers are going to be less likely to have their products next to messaging that they're uncomfortable with, even if they accept that he is allowed to establish the rules for speech on a platform that he is the sole owner of. So the fact that he wants to do it doesn't necessarily mean that there won't be a reaction. And I do believe that that reaction will, as a result, end up with weaker advertising sales and slower revenue growth.
Yeah, incredibly, we still did not get to all of the questions on that topic that I wanted to ask, but those will wait for tomorrow. Time now for our rapid fire section with our remaining few minutes. Number one, will Congress be able to prevent a national rail strike? If not Congress, then who?
Well, if not now, when? Yes, that's the question. Congress says it's going to take it up this week at the behest of President Joe Biden. He wants them to essentially compel railway unions and freight operators to come together on a deal that he himself brokered back in September. I think it would give railway workers a pretty significant pay rise over the next 5 years, 25% amortized over those 5 years with a $1,000 lump sum bonus as well. They need to do this quickly, JD, because there's a chance of a rail strike on the 9th of December, and it would be absolutely crippling, particularly given the time of year, but also the fact that it would shut down about 30% of U.S. freight capacity each and every day. And that's just not something that a weakening economy can deal with at this point. So if Congress does take it up this week, as they said they would, we'll very likely avoid that strike, and that will absolutely be good news.
Number two, what is causing Roku's stock slide, Martin?
Yeah, another downgrade this morning from KeyBank Capital Markets this time. They're concerned with what you were talking about earlier, JD, and that's the fact that advertising spend is slowing significantly. And on that sort of streaming service hub and the smart televisions, the advertising growth just hasn't been there for whatever reason. Roku hasn't been able to capture the imagination of streaming users in the way that people first assumed that it might. And people are pulling back on their own spending and not buying the smart TVs. So you put that together and you have the prospect for slower revenue growth. And as a result, it puts profitability even further out into the field. So KeyBank downgraded the stock. I think it was from overweight to sector weight. They don't have a price target on it yet, but it's just indeed a sort of another weight on the shares, which have been significantly hit this year, and even more so after their weaker than expected third quarter earnings. So the last I saw, the stock was set to open down about 3.5%.
Third and final, what should we expect from UnitedHealth's investor event?
This is an interesting one because it is such a powerful company. And I was looking at the revenue generation, and it's even higher than we would normally assume in a good year for Apple. They're probably going to have revenues somewhere in the region of $360 billion next year. And that is absolutely extraordinary for a company that sits in the middle of essentially the US healthcare system. But their profitability is going to come in just shy of analyst forecasts by about 4 cents per share. I think the assumption was $24.50 to $24.90 per share for the whole of 2023, and it missed the street by about 4 cents. So the stock had a little bit of weight on it in pre-market, but as a Dow component, it's just such an interesting company in the power that it wields in the healthcare sector and just the revenue generation that it can grind out year after year after year. And as a result, I think it's a company that we're going to have to pay a little bit more attention to as investors look to defensive alternatives in a downtrending market. And UnitedHealth is definitely one of those.
Absolutely, Martin. Unfortunately, we're out of time, but tomorrow we will talk about the group stages here, especially the big matches later on today at 2 o'clock. I'm looking forward to that. An awesome conversation, and we get to do it again tomorrow. Martin Baccardax, thank you.
Thanks, JD.
Let's do it. All right, folks, that is going to do it for the opening bell here from the floor of the NYSE. Stick with TheStreet.com for more on these and all of the major market stories that matter to you. Go USA. We'll see you tomorrow.